Hello everybody, welcome back. This is episode number 17 of the Trading Bootcamp series, and in this episode we will be diving into open high low close or open low high close. This is a basic candle theory, so you could basically say this is a candle theory part 2, but I want to make this a separate kind of video just because of how useful and how actually distinct it is from my first ever video, I believe, if I'm not mistaken. And yeah, let's dive into it. So what it is actually, so the open high low close or open low high close, it's basically when you study the basic grammar of the actual candle. So how does a candle form? Let's talk in the higher time frames. Let's say the 4-hour time frame or the 1-hour time frame. So the candle has a period where it accumulates, then manipulates to create that top wick of the candle, right? To create the wick of the candle, and then it usually expands down to create that body. So it would look something like this, right? And this is for what? Open, high, low, and close, as you can see from the name. So, for example, to be a open, high, low, close, it has to be a cumulative, and then it has to go high, right? Because it first starts with high, and then low, and then it closes, right? And that is basic terminology. That is basically what happens for 80% of the candles, I would say, because as you guys know, there are some exceptions to this case, and as trading, this is probability, but for this to be 80% in trading is really good. So I would be really watching this video with full intent. And then in the second chapter, we will be diving into open low high close. So we start with the open low high close, and then I'll give you a backtest example right here, and then to end things off, I'll end up with a review. Now let's start right here with the open low high close. So you guys saw from my intro card, you guys saw the other one. You guys saw the open high low close, right? This is the exact same thing, but the open low high close, right? So what distinguishes this one from the other one that we're going to see in a minute? Well, basically this distinguishes by when the candle opens. When the candle opens is it's at every single time. So if it's a 4-hour candle, it's gonna be opening at the times that the usual 4-hour candle open. It's basically always like that. It's not that is the thing that I did not meant to say. I'm just saying, like, what did this candle distinguishes from the other is that this one first creates the bottom tick and then expands, while the other one creates the top wick and then expands. So as you can see, open low, it starts slow, right? So it first has to create that bottom wick. And now, what do you mainly want to do in this? You actually want to wait for the candle to open, because normally, 80% of the time, when candles open, they start to accumulate for about 5 minutes. They tend to do that. It's always like that. Most of the times like that, sorry. And then right after that, it usually has a breakthrough to either the downside or the upside. If it breaks the downside, which is the example right now, that's why I'm only giving you this one right now. If it breaks to the downside, we call it low, because it first formed the low and then is going to form the high. You guys can see, so it's first going to create the bottom tick and then expand. Now, how can you actually catch this? Well, if you guys haven't paid attention yet, this is the power 3. Look, accumulation, manipulation, distribution, right? But now the issue with this one is that it can actually change. So instead of actually just manipulating into 15-minute gaps, into 30-minute gaps, as you guys have seen from my previous Power 3 and Market Maker model videos, these can actually just manipulate the lows of the liquidity. In this example, which is actually the main thing that it does. It likes to manipulate the lows of liquidity instead of imbalances. This is mostly common for the low high close and the high low close. This is mostly common for what we're seeing, but they also like to manipulate to the 15-minute gaps created by early New York, right? As we have seen from other videos, but they also like manipulating to the sell side or buy side, minor sell side points, whereas the market maker just likes to tap into fair value gaps. This can have both ways, right? And then let's check at the other example, the open high low close. This is exactly the same thing. Oh, I haven't mentioned this little line that you see is when the candle opens. So you can see, imagine this is 10, imagine this is 10:55, let's say. Sorry, my bad. So the candle opens at 10, right? That is when the 4-hour candle opens. So imagine this opening is 10. So before 10 a.m. New York time, it usually accumulates, it usually does its stuff, right? Once it reaches 10 a.m., it really tends to accumulate to form that 5-minute accumulation or 15-minute, whatever, depends on the price action. And then it tends to manipulate to either the low, to create the low, and then expand. That is how it does basically every single day. And how do power 3 traders get stopped out actually is if the candle is not corresponding. So that's why we have a very high win rate. It's just because that we follow the candle rules, and 80% of the time it is, 20% of the time it isn't, and that is where we get stopped out. It's just that. So let's look at the open, high, low, close. So it's the same thing but inverse. And yeah, I haven't mentioned, as you can guys see, this is green colors for the open, low, high, close, and red colors for the open, high, low, close. This is just because the open, low, high, close is bullish, because you actually form the bottom tick first and then expand. So you can kind of see the expansion is going up. Whereas if you have the high, what does this mean? It means that you're accumulating, you're manipulating to the upside, and then you're expanding down. Down means bearish, down means red. And yeah, so it's the exact same thing. You basically have price doing its thing. The candle opens, for example, let's say at 10 a.m., the 4-hour candle opens, and then it manipulates the buy side, taps into a 15-minute maybe, and then it goes back down. Now, I actually have one example right here that I like to trade actually a lot, and this is what I usually call the Jewish fake out. Yeah, this thing right here is usually called a Jewish fake out, and you guys will understand why I call that actually in a short moment. So you can guys see we have the accumulation, manipulation, and then supposedly a distribution. And now this is where most power 3 traders actually fail, because they spot the accumulation, beautifully done. They spot the manipulation to the 15-minute gap, right? Beautifully done as well. And then they see, oh, we have a change in state delivery and an inversion for value gap right here. So should I enter? Most of them are going to say yes. But they are mistaking one crucial thing, is this line right here, which I've stated is the open of a new candle. And the new candle always, and I mean this is now 99%, the new candle always has to form either a high or a low. In the lower time frames, in the 1 minute time frame, right? In the 1 minute time frame, candles can be what is called a marbutsu, if I'm not mistaken. It's basically a candle with no wicks, right? That is not as uncommon, right? But once you start getting into the higher time frames, because the candles that you actually trade using this are either the 1 hour or the 4-hour, those candles always have to have a little wick, right? And that wick, that single tick of a wick, it doesn't matter, that single tick of a wick can be your manipulation. Yeah? And with that manipulation, what your main focus is to catch the inverse or the other side of the trade, right? Because that is what power 3 traders do. We wait for the manipulation, and then we wait for the distribution to happen. And the distribution phase is the expansion phase up, right? So these higher time frames, they always 100% of the time find, you will always find these wicks. You always find these wicks. And with wicks come manipulation, because wicks are manipulation. How can you take a trade from that? You wait for the, guess what, change and inversion. Now, let's look back a little bit on why I actually call this the Jewish fake out. Because look, same thing, 80% of the time it accumulates, right? It doesn't have to, but then it 100% has to form that down wick or up wick, which in this example, it formed the down wick for sake of simplicity. So you can see we have the first manipulation, all good, and then we had this little change and this little inversion for value gap, right? Blah, 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 we could enter. Well, no, because of this opening. So the new candle opens, it always wants to manipulate. And in this case, since we are near a 50-minute, because when the let's say the 4-hour, this is a 4-hour. So let's say when the 4-hour candle opened, it was trading above the 15-minute. And what do you have right below? You have a big imbalance, a 15-minute imbalance, and you have this new liquidity point. That's why it's called a Jewish fake out, because Jews love money. You're trading above a very, very important imbalance, which has liquidity underneath. And one that I mentioned in the beginning, in the intro of this video, they usually like to grab liquidity points more than imbalances. If there was no imbalance over here, price could just be targeting the liquidity point and inversing to the other side. That could happen, right? But since we have these two combined, price will be even more attracted, like a magnet. It will be even more attracted to sweep, not retail traders, no dummy. It's not retail traders that price wants to stop out. No, it's banks and institutions that really put their money right here because they also understand it's not for value gap, it's order flow, but that is another thing. Because for value gaps are traded with order flow, if you guys did not know, right? And then the new ones, this candle needs force. When the 4-hour candle opens, since it's a very, very high candle, it needs force. How does it get that force? From sweeping out the others. When it sweeps out the others, price gets cheaper, new entries get filled because these guys just get, in this case, since this is a bullish example, these guys that have the stop right here, this is called a sell stop. So they got sold right here so that the other big banks and institutions can buy up, and they have actually sellers, because in markets you have to have a buy and a seller if you want to buy it, and if there's no sellers, there's no contact, so you can actually have a trade. That's why it's called trading. You trade, right? So once they stop out all of these sellers, let's call them sellers right here, they are going to have entries and possibilities to buy price back up and explode into the direction that it always wanted to go towards. So you can see it's pretty simple, pretty objective too. There's not much to it. You just got to focus up, and you got to use an indicator that I'm going to show you guys right here that I use that is really good, which is this one. It's I'm trading on the 1 hour. As I mentioned, it can be the 1 hour or the 4 hour. I usually tend to trade the 1 hour just because of times like, for example, well, with the 4 hour, the new candle only opens at 10 and then 2, right? Because it's 4 and 4. So it opens at 10 a.m. and then at 2 p.m. Whereas with the 1 hour candle, it has basically the same impact as the 4 hour. I mean, not as big. That's why I'm usually a 10 a.m. trader. But if I'm caught in intradays, for example, if I'm caught in like 11 a.m., a new 4 hour won't open at 11 a.m. So I just trade with the 1 hour. That's me personally, but I also have a lot of guys that trade the 4 hour. And if you are basically starting, I would recommend the 4 hour just because of sake of simplicity. So you got to focus up on this one. You can take a picture, whatever. Power 3 Pro, 1 hour candle medium. And yeah, this is my main one, but let me actually show you. I have another one right here in my TradingView account, which is this one. ICT, high time frame candles, FADI. You can have all of these candles that you like right here on your right side. It is going to be open on your right side, and then you can just enter and do whatever, right? But now let's see actually the backtest. So you guys can't see this because it's cut out, but this says 12:59. So this candle right here is a 1 hour candle that formed from 12 a.m. to now is going to be ending right now the second I click this button of the mouse. So let's see what we have right here. It is the same thing. So what do we have? We have here in the daily, it's looking bullish. However, we have the sweep, which can indicate an SMR. Let's go down to the 4 hour to see better. The 4 hour is kind of looking a little bearish, right? Because, I mean, although we have this impulsive, we also have this little down stairways. Let's look on the 1 hour is when we actually identify things. So right off the bat, I can see that we got this. That this can also indicate an SMR. However, look at what we have. Have you guys seen my market maker model video? I'm going to put it right here. If you guys haven't seen it, this is a market structure shift on the 1 hour. Therefore, this is confirming this SMR, which is pretty good because now price, it looks like it's going to manipulate up either towards this point or just another small point of liquidity to then inverse and target maybe the New York close. Now let's see if even more. So yeah, you can see in the 30-minute, we have a market structure shift confirmation. However, in here, as you guys can see, we have this 15-minute fair value gap created by New York. Now, why is this fair value gap not the same as one created right here? Because you can see it's kind of accumulative. But if you go check underneath right here, you can see 9:30, 9:45, 10 a.m., right? These times are the strongest, most volatile times of these pairs. That's why when fair value gaps are created right here, they are more and more powerful than the ones created right here. So that's why I will be focused on this one. Actually, if it actually manipulates into this one and creates a good trade, I will enter. But I will not take this as like a safe haven just because it's not as good as the other one, right? Now let's see. We can see this little accumulation. So we could see maybe a manipulation, then an inverse change to target the upside, right? That would be a good thing to do. But now let's see also this, because this is also a little controversial to you. So we have all of these liquidity points. I actually need this tool. We have all of these liquidity points. What does this mean? This means that there's a lot of stop orders. There's a lot of liquidity above here. That's why I'm not as confident right now about this 15-minute, just because of how many points of liquidity are in here, and especially if price manipulates towards this high of the same candle. So if price does something like this, touches the upside and then inverses, I will be more confident taking that trade than the one of the fair value gap. Now let's see what happens. I am on the 15-minute. I totally forgot. So, all right. We're back here again. So, sorry, I was on the 15-minute right here. I did not see that. Now it's on the 1 minute. But yeah, you can see we can still enter. And I already see a trade setup. How convenient. So you guys can see we actually tapped into this 15-minute, creating the supposedly power 3, right? Because you can see it from the low of this new 1 hour candle. And we also have this inverse value gap and also this clear change in the state of delivery. Now, what do I like to see? I like to see impulsiveness. Is this whole thing impulsive? No. Does it look like it's going to pull back a little? Yes, just because of look. It did climb up, right? But look, we have down candle, down candle, down candle. This was pretty strong down candle. So I do not see bullish confirmation just yet. So that's why I'm going to wait for another thing if I can enter on the downside, because this is also following the market maker model, because I'm on the sell model. Therefore, this bearish trade that I want to take is going to be I am going to have more confidence in that trade than taking this one from the fair value gap, because as you can also see, we swept this liquidity, and when we swept this high, immediate reaction to the downside. So this can be really good. And we also tapped, let's check, we also tapped this 50% mark, right? Now let's see if we can have a change of the state of delivery right here. And that would mean a lot to me, because that will basically confirm that this trade is valid and I can actually trade in this entry. Now let's see if that happens. You can see, look, very clear bearish impulsiveness. So basically it's going to be canceling out the buyers. You can see from this, buyers try to push price back up and sellers said nah. And you can see from this candle, it's kind of like a Marabusu. And then did it close? Yeah, you can see it closed below this bullish one. So it becomes our change in the state of delivery. So I can confidently trade this Now let's recap a little bit. So you have this accumulation, manipulation to a 15-minute. However, the 15-minute is not as strong because I am following a market maker sell model, and we also have immediate clear rejection from this point of liquidity, right? Which price actually, when it touched the 50%, it rejected, which is also good. And we also have a very, very good top wick. Just let me show you guys. You can see the top wick is actually crazy. And that is what we like to see as a trade. And let's take a trade and let's see what happens. Now, what is my target right here? Since this was an accumulative day, I am just going to be targeting these New York lows underneath, just because this was the lowest traded. No, I'm sorry, it's not this one. This is a little messed up. It's actually right here, 950. You can see from underneath. This is going to be my sell side liquidity. So basically my target for this trade, 1 to 7R. I'm going to place the order right now because this was the lowest traded range. We also have this low resistance liquidity right here. And where is going to be my break even? My break even is going to be at the nearest high impact low, which is going to be this wick actually right here. That can cause a little rejection to us. Therefore, that's going to be my break even. So recap to the targets. So this is the sell side liquidity of the range, low resistance liquidity everywhere, wicks everywhere, break even set, and let's see what happens. All right, so you can immediately see a reaction to the downside. So this is pretty good because it's confirming my trade. Now price is heading a little bit. Oh, we tapped. So we're now going to go break even. You can see this huge displacement downwards, which is just what we like to see. And let's see if we get stopped out at break even or if we get this trade to the downside. Oh, boom. There you go. Quickest 7 grand right here. And basically top trade you can have. Look, top wick right here, swept this one, changed instead of delivery. And we also, to confirm even more the trade, this is what I like to do to confirm even more something, is when you enter on a trade, if price comes back to the change in state of delivery zone, because as you guys seen from my change in state of delivery video, this everything above a change in state of delivery in this example is a zone. If price touches that zone and then rejects immediately, you can confirm that trade even more, and you can basically even size up if you would like, if you're a risky guy. And yeah, you can see beautiful trade, beautiful entry, beautiful setup. And despite this was an accumulative day, it was pretty good either way. It rhymes. Now, and yeah, guys, this was a pretty simple video. Pretty simple things that you guys need to take in mind, need to consider, because this is really important, right? These topics will keep up with you. These will stay up with you, even if you switch strategies, even if you or whatever. Knowing this will be fundamental to advance in your trading progress. So please study this, revise this, watch other videos, watch another recommended video from mine. And yeah, I hope you guys enjoyed this video. And I'll leave you guys right here. God bless you, man.